Okay, Jonathan, I'll probably make that around about half 12. So what we'll do is we'll just basically get things moving now. So thank you very much, everybody, this afternoon for attending our webinar. So my name's Gurpal, my colleague Jonathan, who's just been hearing now. We are going to be introducing identifying Japanese candlestick patterns today. Now, before we get into the main crux of the actual webinar today, we'll just launch this disclaimer. So before we start things off, I'll just read the top paragraph here for you guys. So spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 75.2% of retail investor accounts lose money when trading spread bets and CFDs. So you should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your funds. So past performance of any strategy or trader should not be relied upon for future performance. Okay. Right, two-way market. So for anyone who's very new to us, so we're myself and Jonathan. So we work for two-way markets. We are working under the registered company TMS Capital. We've been established since 2003, and of course we are authorised and regulated by the Financial Conduct Authority. Now, welcome everybody, and for those of you who are very new, every week we have an influx of brand new sort of new faces which join us, which we're really happy to see. And just to sort of keep you guys abreast, we're happy to take questions as we move along. There is a chat box facility available on the software, so if there's any questions, or if there's any problems with the sound or anything, or the visuals, just use that chat box facility to communicate with ourselves. And yeah, we'll be more than happy to sort of either go through questions as we go along or sort of get them towards the end of the session. So Jonathan, my colleague, will go and actually start things off proceedings, and we'll get into the main sort of topic for today. Thank you.
Absolutely. And of course, as Gurpal mentioned, we're going to be looking at Japanese candlestick patterns. So I just want to introduce, obviously, candlesticks and then dive actually into the patterns themselves. And of course, what we'll be doing is then applying those onto live charts. And as well, Gurpal, of course, mentioned the chat box facility. So if you do have any questions, please do partake in today's session. Just let us know. We'll go at your pace. So let us know if you just need us to recap over anything, or you have a particular question on a particular subject, and we can have a look at that together. But without further ado, so I've actually put on the screen two boxes here because I always like to make people aware that there are two different types of analysis when trading. You have your fundamental analysis, and then you also have your technical analysis. And today we're going to be covering a topic which is focused on technical analysis, though it is worth mentioning that Gurp and I, we have been doing these Q&A trading clinic webinars for quite some time now. And I believe one of our earlier sessions, one of our very first sessions, in fact, Gurpal, was looking at fundamental analysis. Now, just to make the distinction, so I know we introduced that website Forex Factory before, which is a very useful source for fundamental kind of analysis and finding out that information. But just to make the distinction between the two, fundamental analysis basically looks at factors affecting a country's economy. And so, for example, interest rates, that will attract more investors, which over time will increase the value of that country's currency. Yet if interest rates are too high, then that means inflation may be a problem, and inflation will erode the currency's value. So those are factors affecting the price of an instrument which you're looking to trade on. Also, if the government's going to regulate or stimulate the industry or the economy, these all have an impact actually on the price of the instrument that you're looking at. Whereas technical analysis, this, as I've pointed out here, relies on past price movement data to predict a future value. And the great thing about technical analysis is that you don't need to actually find out all the details, because the first principle says that it's already included in the price. So, for example, I like this quote here, which is why I've included it, but technical analysis and trading chart patterns works because human behavior is repetitive and predictable, permitting historic price patterns to be used to forecast price movements for spread betting in the future. So we're looking at patterns today. There's actually 3 patterns that we're wanting to highlight in particular, and we'll dive into that just very, very shortly. But it is important that we're all on the same hymn sheet here. We're all playing on the same level field. So I just want to quickly go over a candlestick and what it actually means and represents. A lot of individuals, they look at their charts and just take it at face value without necessarily understanding the deeper meaning behind the actual chart itself. And I liked the analogy which was used in the email which went out over the weekend, where you can consider candles as words in a sentence. If you were just to look at the last word in a sentence, that sentence won't make much sense. There's no context. Whereas if you look at that sentence as a whole, that's when it actually gives meaning. But with regarding the actual candlestick and breaking down a candlestick, it's essentially, there's 3 basic features of a candlestick. You have the body, which represents the opening and the closing range. So I've annotated this, the open and the close. You then have the wicks of the candle. It's also known as the shadow, which indicates that high and that lowest period for that candle. And then the third kind of factor is then the color of the candle, which reveals the direction of the market movement. So, of course, we've got a green candle here on the right, which indicates that the price has increased, while a red candle represents that the price has decreased. So green candles are bullish, whereas red candles are bearish there. So they all do come in a variety of shapes and sizes, as we'll be going on to very, very shortly. But again, it's important just to know those different parts of a candle. So if we have a green candle, that means that the buyers are in control for that period, since the candle closed higher than where it opened at. So we can see the opening price is here at the bottom of the body, and the closing price is towards the top at the top of the body. Whereas with the red candle, it's the opposite. The sellers were in control, so we opened here and it eventually closed at the bottom of that body, although we can see the respective highs and lows for that period. Okay, so I just want a round of yeses in the chat box just to make sure everyone's clear of that. I know we do get quite a few new individuals to these webinars, which actually is a brilliant tangent. If I just launch one of our polls, which Gerp and I put together, it's actually worth us just asking here now. So I suppose that this would be the closest, but is there anyone who's currently trading live? I'm quite interested to see the percentage, because those who aren't currently trading live are those who are more likely to be new to trading. So it would be interesting just to get a gauging of who in this session is kind of familiar with these different concepts. But fortunately, I got a round of yeses, so that's really good to hear. Everyone's quite comfortable with the actual breaking down of a candlestick, so which means that we'll be able to proceed. And Gerpel, just because I know you can't see these results yourself, with regard to the poll, 90% of people are saying that they're currently trading live. 10% of people are saying no, which is very interesting. We've got about 100 people in today, so that means that about 10 people said no here. They're not currently trading live. The vast majority have said that they are. So that's a very interesting breakdown there. Okay. Well, what I'll do is I'll close that poll off for the time being. And now that everyone's clear with regards to the actual candlestick and what it shows, I just want to, I've actually got an additional picture here, so apologies. Basically, yes, candles, they do come in a variety of different shapes and sizes. The actual length of the candle would show you the kind of the volatility in the market. So whether there's a great deal of volume or whether there's a narrow range, which means that the market hasn't really all moved during that period. And low volatility typically indicates that there will be a reverse in price soon. There could be some explosive volatility. So it's similar to that of the Bollinger Bands concept in that respect, where you find if the bands condense, then volatility is low, but that could then signal a potential outbreak of volatility. But again, this is just to demonstrate that, yes, you do get all different shapes and sizes, which directly feeds into, of course, trading with candlestick patterns. Now, why would an individual consider trading with candlestick patterns? Well, essentially, there are two groups of traders in a market. There's the buyers and then there's the sellers. And candlestick patterns provide a way to understand which of those groups are currently in control of the price action. So many candlestick patterns, they indicate an opportunity within a market. So that can be to recognize support and resistance levels. They can provide insight into the balance between buying and selling pressures. Others can indicate continuation patterns or even market indecision. And so that kind of touches on some of the patterns which we're going to be highlighting today. But a point which I've made here at the bottom, these patterns, they are in fact easy to identify and comprehend if one makes a little effort just to study them. So we're going to be actually highlighting what you're looking out for. Then we're going to be heading over to some live charts, and then perhaps set yourself a bit of homework. Look on a chart. You can look at previous price movements. You can look at this point going forward over the next couple of days. Just let us know how you get on when identifying these patterns. And of course, if you then need any assistance, we'll be more than happy to help. There are, of course, lots and lots of different chart patterns. Candlestick charts themselves, they've been very popular since the 1800s for trading. So they actually originated in Japan, the actual candlestick charts themselves, and the patterns, of course, over time then became more popular. Now, we're going to be focusing again on three major patterns, though we really could make a whole webinar series just out of candlestick patterns themselves. There really are lots. So again, as we always say, if there is a particular pattern or indicator or subject that you would like us to cover in a future session, let us know. We want to make sure that you get the most out of this. These sessions are for you ultimately. So just let us know in that chat box facility, or just drop us an email. We'll provide our contact details at the very end. But I think it's about time to actually look at the indicators, the patterns which we're going to cover in this particular session. And so I've broken it down into some ghastly looking images here, but basically you've got dojis, hammers, and marubozu. And I apologize if I pronounce that incorrectly, but I believe it's marubozu, isn't it, Gerpel? That's how it's pronounced.
Yeah. Do you know what marubozu actually stands for, Jonathan? It means shaven head in Japanese. There you go. You learned something a couple ago. Shaven head.
I wasn't aware of that.
I'll explain to you why. Well, I'll let you explain it, then I'll sort of go through why potentially it is. That's the reason why they've called it. But yeah, carry on.
Perfect. Well, so dojis, hammers, and marubozu. Now, funny enough, with dojis, there's then essentially three kind of doji patterns which can exist. So think of them as perhaps subcategories. So we're actually going to be covering a few different patterns which one could identify on a chart. So with dojis, you have doji star, dragonfly doji, and gravestone doji. We then have hammers and marubozu. But very quickly, with regards to dojis, now Gerpel kindly he gave us the translation in Japanese for the Marus. I wasn't aware of that one. However, with dojis, I know that doji means origin, and it's these types of patterns are given the name doji because the opening and closing price is virtually the same. They have the same origin. So you'll find these quite easily actually on the chart. You're essentially looking at those candles which virtually don't have a body because the opening and closing price are one of the same there or thereabouts. With these candlestick patterns, it's hard to be strict saying that is definitively yes or no a particular pattern. Some that the body might be a little bit bigger, but there's a bit of leniency between the different patterns, and we'll be actually looking at that when we go onto the charts themselves. But typically, again, what we're looking for here is the opening and the closing price to be virtually the same. Again, there's going to be a bit of leniency there, but virtually the same. And the first doji, again, we'll look at these actually on the chart themselves, but this leftmost doji, which I've got here, so that typically would indicate indecision in the market. It's the actual opening and closing price is smack bang right in the middle, typically between the top and the bottom, the highest point of the market achieved during that period versus the lowest price that the market achieved during that period. It's just indecision. The market doesn't know where it's going to go. Now, looking out for those is quite key because when you have this moment of indecision, it might be that a trend is just about to end, and it's that kind of indecision as to what could then happen next. The momentum in that market might now be dwindling, and we might be due a reversal. So it doesn't really necessarily by itself give an indication as to which direction the market could then go in, other than there could be a significant move here in the market, and it typically does actually foreshadow a bigger move to occur. So they are always good to look out for just in that sense. And many traders, I should have mentioned this at the beginning, but many traders use dojis, but wait for the confirmation of a move in the following candle. So again, we'll look at that actually on a live chart itself. But that first doji, again, they're referred to as doji star. It is where the opening and closing price is smack bam right in the middle of the high and the low. Okay. Now, to the right of that, I've got a dragonfly doji. So this one here. Now, with this, the opening and closing price is right towards the very, very top of the is at the very high. So essentially, if we were to think about what happened during the course of this candle, the price would have opened here, but then would have gone all the way down to this low here, but then would have rallied all the way back to the very top again, right where it opened at. Again, there's always a bit of leniency, so there might be a small wick coming out of there at the very top, but again, we are generally looking for the opening and closing price to be right at the very top where the high is. And that typically is a very bullish sign of movement. It might be, for instance, if there's a few candles before it, the market's going down, we then receive this, and then the market could start shooting up again. Okay. Now, it typically suggests a reversal followed by upwards trend in price action. Whereas the gravestone doji, essentially, that's just the inverse. We find that the market opened at this point. It essentially went all the way up to that high at the very top, then went all the way down again. It basically didn't like that level, couldn't settle there. It came all the way back after its little rally, and then eventually close at that near bottom lowest price for that period. And again, the opening and closing price, they would have to be pretty similar with these. There's always a little bit of leniency, but they're going to be very similar. So we're going to be looking at those actually on a live chart. Now, just very quickly, that second kind of pattern which I mentioned were hammers, and these are in fact very similar to the dragonfly dojis and the gravestone dojis that we've just discussed. So if we were to look at this dragonfly doji here and then compare it to what I've circled on this chart, what we find is that the body of these hammer patterns are bigger than doji, which again, it gets its name from the fact that the opening and the closing price is virtually one and the same. But hammers, personally, Gerpel, I don't know about yourself, but hammers are perhaps one of my favourite of all of the different patterns, the Japanese candlestick patterns. Hammers are one of my favourites.
Yeah, they're a bit. You'll probably see more hammers on a chart than a doji. Dojis are probably a little bit few and far between. Hammers are more prominent on charts, which you'll probably see later.
Yeah, so with doji, it's quite rare for, in fact, then the opening and closing price to be so close together in those instances. Hammers, therefore, as you've just mentioned, that they are more populous on the charts themselves. But in this instance, what we've found with that circled candle is that the price has dropped down lower than its opening, but then rallies within the period to close near the opening price. And the pattern forms the hammer-shaped candlestick. So think of it as a hammer there. So we do typically say, as a rule of thumb for hammers, though, that the actual lower wick here has to be at least twice the size of the real body itself. So again, general rule of thumb, this period, let me actually just annotate this. So the distance between here and here, okay, needs to be at least double the actual size of the body itself. So it's a nice way of kind of distinguishing. Okay, perfect. And as a rule of thumb, again, hammers are most effective when they are preceded by at least kind of 3 or 4 declining candles. So if the market has been on a downtrend and we then were to identify a hammer candlestick, we can see that the market tested that new low, didn't like it, it's retraced back that movement, and this is quite a bullish signal that the market could then be due a reversal. And you do then have the opposite, so the opposite of a hammer, which is considered an inverted hammer, where instead of the hammer shape being on the top, what you would find is that hammer shape to be at the bottom. So that's known as an inverted hammer. Well, it goes by a few names. Gerpel, what's the other name that it typically goes by? I normally just call it an inverted hammer.
Yeah, I mean, to be honest with you, I mean, I think most people just call it a hammer, just like a bullish hammer. You have, on the opposite side of it, you have, I think they call it a shooting star, which is obviously opposite to a hammer.
Yeah, shooting star, that's the one, yeah.
Yeah, so this, the hammer is considered bullish, of course, and the shooting star is more bearish in terms of its makeup. I mean, effectively, Jonathan, I mean, you explain it perfectly well there. I mean, the price down here is just a complete rejection of that level or that area, and you know we'll get onto the live charts and we'll show you what these mean in context. I think that's the key word today, is context. How these general shapes and patterns really figure out into the live market, and hopefully, like you said right from the start, they do have their own story to tell once you sort of see them in a live market.
Absolutely. When you see it surrounded by the other candlesticks, it's quite interesting to see that story unfold and what could then really happen in the market. Now, with regards to this small annotation which I have here of a morning star, or otherwise known as an inverted hammer, again, just so that people are clear, what you typically find is that the market would go up, you'll find that candlestick pattern appear. So hanging man, did you say, Gerpel? They do go by a few different names, don't they? But then what you find is that bearish kind of signal, and then the market will go back down. Now, looking at my screen at the moment, it looks horrible with all those annotations, so I do apologize. We are now just going to introduce that final pattern, and of course we're going to be looking at these actually on a live chart and going through them together, so don't worry. I just want to make sure everyone's clear of this final pattern, and that's the Marubozu. Now, Gerpel, you mentioned that it was bald head or shaved
well,
head.
the reason why, let me explain. The reason why they've called it is, have a look, there's no wick on the top. So I guess what they think, the why they call it a shaven head is because with a Marubozu, you have little or no wick on either side of the candlestick. You can see it's generally, the makeup of a Marubozu is just a full body. And that really is the reason why, I guess. Yeah, so it's nothing at the top. There's not even a strand of hair at the top there, so it's all been taken off.
Now, these are always an interesting candlestick pattern just to highlight, because they are considered very, very strong, a very strong, powerful pattern. So it basically means that the instrument opened at a certain level and kept on rising without falling during that period. So again, the market in this instance with this leftmost candle, the market opened and it just kept on going up and up and up and up. It did not produce a new low. It didn't go any lower than that point in which it opened at, or virtually did not go any lower than that. It just rallied all the way up until the closing of that period. So whether you're looking at a 5-minute chart or 4-hourly, daily, monthly, whatever it might be, it's just a very powerful continuation kind of candle pattern. It just means that as there's been such strong kind of momentum showing in this particular pattern, that the following candlesticks are likely to continue that trend. So continue to go up. It's a very bullish signal, this leftmost candle. And the opposite, of course, we have the bearish, where we open at virtually the high there and we close virtually at the low. And that's a very bearish signal, indicating that, yes, the market could then very well go down further. If we think about it logically, for the market to have opened, not produced a high, and literally closed at its low, it's basically gone only in one direction that whole period, virtually. That is quite significant, and it's more significant the larger the time frame it is that you're looking at as well. But yeah, it's considered to be a very powerful pattern, and so we're going to be looking at these actually on a live chart, and you'll be able to see for yourself. So what we want to essentially achieve today is just bring these to your attention, so that, yes, you could then be looking at your charts. You may have already your existing strategies, but have a look at these on the chart. And when you do identify one of these patterns, have a look at actually what then happens in the market. It's quite interesting if you were to see these Marubozu, what then unfolds. I would say that they are, to get a perfect Marubozu, where essentially there is no wicks, is very rare to get, again, perfect, but there's always a bit of leniency here. We're essentially looking for there to be as small of wicks as possible, a very large body relative to the actual wicks of the candle. But yeah, Gerpel, we've got the charts open, so perhaps if we were to head on over to the charts.
Have a look. Yeah, I mean, and remember, all of these really, you have to remain, it's the context of what you're looking at here, really. So it's not just a case of, oh, I think I recognize a candlestick, maybe I should buy or maybe I should sell. Not quite. You have to realize what candlestick you see. So this is a good example here, Jonathan. This is the Dow Jones. It's a daily chart. So each of these candlesticks, I'll make this a bit bigger so it's a bit more easier to view here. So each of these candlesticks are a daily chart. So if you have a look here, if I just make this a bit smaller here, let me move this along, bear with me. So yeah, I mean, we'll go all the way back here. Let's start with the first candle here. So we've actually got a Marubozu here. So this is a continuation, as you mentioned, Jonathan. Now, yeah, it's if you look at this particular one, it's a very, very powerful candlestick whereby the majority of that candle is full and full embodied, really. There's hardly any wick on either side. It's continuation. It's giving you an idea where this market is extremely strong. So, you see a market like this, or you see a candlestick on a daily finish like this, there's every chance there's a continuation that this will carry on going up. And, this is a perfect almost a perfect Marubozu here. Like Jonathan mentioned earlier, you do get the ones where you have, slightly no wick. But you can see this one here. Hopefully you can see that. There's actually no wick there, and it carries on going up here. And there's another one here, over here, Jonathan, another bullish Marubozu here, whereby you've got the market literally open and close at near-term highs, and of course the following preceding days it carries on going up. So it is one of these quite a powerful continuation signal when it comes to looking at the markets. Now, if I take you back here now, Jonathan, hopefully you guys can remember all these. I do appreciate a lot of them. It's having an understanding, and there's lots of cheat sheets that are available on the web, on different websites, where you can actually print these out and actually have a look at what they all mean. But here is a perfect hammer here. So Jonathan, you can see here there is the market closed here. So these are daily charts, remember. So there's a hammer. In fact, we've had two hammers side by side. So there's a hammer there and there's a hammer there. So two hammers, preceding hammers there. So two very bullish signals that the market is looking to, it's rejected the bottom side of this. Yeah. So it's rejected the lows of the day twice. And then lo and behold, of course, we have that big rally there. Look at that rally there. So it just goes to show that how these can work.
And can I just take control of the mouse here, Gabriel, very quickly? Because I think this is quite an interesting point to make here as well. This is just an observation rather than any kind of point to teaching. But what we have here is essentially that hammer, which you identified. And then, that typically would indicate a reversal in the trend. It's tested that new low. It rejected it. It rallied back up. It's now quite a bullish signal. The market's increased here. We then have the Marubozu, the continuation trend, letting us know that, this is quite powerful. We're going to continue. Now, this setup here, what we've just seen, have a look. That first candle, which you introduced right over here, we actually, if I just bring annotation tool here as well, we actually had hammers here as well. Quite interestingly.
Yeah. So they're all over.
So
you just
hammers,
need to be very, the whole point of this is just being very receptive of what you're seeing here. The more you watch out for these, the more you'll become, more it becomes very, very much part and parcel of your trading. Now have a look at look what happened here. Now look, these if I make this a bit, there we go. So this hammer we're talking about, these two areas, there's a line of area of support and resistance here, Jonathan. So, if we ever look at it contextually here, the market rejected this twice. So this area, it's rejected it twice here. So this area was support before, and it's rebounded over. And look here as well, it's rejected it again here. So I wouldn't necessarily say that's a classic hammer, but generally you can say that actually that is actually we've rejected that area again, and we've rallied up, and we've sort of settled halfway up the up there. So it's a kind of a hammer, but then look at that, look how it goes up, and then
something which is worth adding here as well. Yeah, sorry. I was just going to say, and that level is go ahead.
I was going to say, just basically on the flip side of that hammer, we've got a shooting star here, which is an opposite of what we've seen down here. So, the market has looked to rally up here. So if we take the support, we take the horizontal line here again, very quickly, Jonathan. Sorry, I'm not going to step on your toes for too long here. So you can see, the market failed to settle up. Settled fairly low down there, and we've basically got a sort of a shooting star. And then market, of course, had a couple of days to think about it, but obviously we broke down after that. So carry on. Sorry, what were you saying?
No, don't worry. Apologies for that. The point I was going to make here, and you've actually raised a really good point here as well, is that if we actually look at the level, that support and resistance kind of levels which you've put in here, this this level here is basically right by the 26,000 marks, a big psychological level in the market. So if we actually look at the lows of where those two hammers were, we are literally talking at 26,000 level on the Dow. And funny enough, this at the very top side, guess where that's at? That's well, close by the 29,000 level. So it's interesting just to actually keep track of, again, the context of where these present themselves. Of course, we're going to see candlestick patterns present themselves just randomly throughout candle, but it's always more powerful if we actually then look at that in context and what the market has been doing.
And yeah, you got to think that these are buyers and sellers. Remember, that's all they are. Think about why that candle looks like the way it does. I mean, if you have a look, I won't put that line there, but there's a gravestone doji there practically. So it's near close to the bottom. So gravestone doji, it's tried to rally up here. We've seen it a few times. It's tried to rally here. If I move that arrow back here, look. So we've tried to rally at the top here. We've failed it. And then, of course, that's a daily chart, remember. So we've settled near the low, and lo and behold, look, we've actually just dumped after that. And then there, yeah, you've got another almost a Marubozu here. So look at the Dow Jones over the last few days and weeks. We've basically been full-bodied candlestick there.
Now, what I would just also like to highlight here is that we are literally at all-time highs for the Dow right now. And so when you get to a new high, this is uncharted territory. So there's going to be perhaps more indecision in the market. Does it go further, or have we hit an area of potential resistance here? So let me just highlight that very first pattern which I introduced, the doji, but it was the actual star doji, where you have that real indecision in the market. We have one of them there. Again, this is where the opening closing is smack bam right in the middle. You could also argue that this point here, again, the opening close is perhaps a bit wider apart, but it is a doji where there's indecision in the market. We're at all-time highs here, guys, and we've got this point of indecision. Are we going to go higher? Or is this as high as it's going to go? And so, yeah, really interesting to see those. And actually, in fact, Gerpel, this current candle here, although granted it'll be interesting to see where that will actually, will finish. Will it finish close to the close? Close to the open,
this is why it's so imperative to look at a closing price of a market. This is why the close is so important. Almost during the day, it doesn't really matter. I mean, these are daily charts, mind you, and whether you're looking at a 5-minute chart or an hourly chart, it's that close of candle that's imperative here. So while this is open, it's going to trade. So we could actually go up further when the Dow Jones cash market opens up. It could go all the way up there, and then the last half an hour, we could close all the way back down here. That potentially could be, something like a shooting star or a hanging man. That could be a point of a reversal where the market starts coming down. But you've got to look at it contextually. Look here, we've got an area where the market's hit its head a couple of times. There's a fairly lofty position we've got in the Dow. So tonight's candle will be quite interesting to see what we do here. Where it finishes is anyone's guess. But if I sort of move it on, I'm sort of pretty aware here of the time here, Jonathan, and it's just pretty much the same story. It doesn't matter what market you're looking at. Now, this one is just a 5-minute chart. Now, granted, we've been looking at a daily chart, Jonathan, and just to show you, they're the same candles, but they're running off every 5 minutes. And, this is the ETX platform. You can see here, can you see the top left-hand side here, Jonathan, that counter, 4 minutes and 18,
Countdown.
17 seconds, that is the close of the candle. So that's why it is important. You've got a Marubozu here, candle on gold, and it's a continuation, carries on going down here. We've got one here that's going in the opposite. Look at this classic bullish one. So remember with the Marubozu, it's either continuation or it's a reversal, the sign of reversal or a breakout. So you can see the market been going sideways, and we've broken up. So there's a Marubozu. It's closed all the way at the high of that 5-minute candle, and it rallied in the preceding markets there. And then look, you've got your doji here, Jonathan.
Dragonfly.
So
the Dragonfly doji.
The Dragonfly doji here. Look, so it's come out all the way down here, this area of resistance, and it's closed all the way at the top. And look, we've just rallied. And this is a 5-minute candle, remember. It's a 5-minute trading. So you could incorporate this type of trading or these types of sort of candlestick patterns to a 5-minute chart. And same again here. Here's a sterling dollar cable. We've got a cable here. We've got another doji here showing. There we go. We've got a close of a doji here. And if you have a look, there's an area of support there. We rejected that bottom area where that line is. We closed at the top, and then the cable just carried on rallying. And then we've got a Marubozu just to push that market up further. And we've got a reversal here. Sorry, go on.
Just very, very quickly, sorry. Julia's just put a message in the chat. She's finding that the open, high, low, and close information is actually hiding the candle, and just has asked if we could actually remove that. So if I just do that just before you jump into the that second, what was it? It's the data tips, is that it? Yeah. So that's actually, for those of you who wish to remove the open, high, low, and close, it's the data tips, which you just have to get rid of. But hopefully that's a little bit clearer for you, Julia.
Yeah. Again, this is no problem, Johnny. So this is look at this, perfect. This is on the sterling dollar, so just a currency. So we've got an area here that we're very interested in. Look, there's an area of support and resistance there. We've rejected that area, and lo and behold, look, we've got a hanging, well, we've got a shooting star doji here, shooting star type of candlestick here, should I say. So we've gone up, we've tested that high, we've settled down below, and look what happened afterwards. These are daily candles, remember. These are lots of pips, and the market just collapsed since then. And then, we've got a bit of indecision there. But then, you know what? Indecision doesn't necessarily mean it's going to reverse. All it means is the market might take a bit of pause here, but then it carried on. It carried on going down. And it just goes to show they do work here. Like, Jonathan, there's another one here. If I move that along. There. So there, again, another hanging man, a shooting star, should I say, or hanging man. And then we've closed, we've tried to attempt to rally above this area. So support and resistance is contextually key here. You could get dojis and these candlesticks in the middle of a pattern. They're probably less conclusive then. But when you look at it in the context of a market where an area of support and resistance is there, and that market and that candlestick then shows up a doji or a hammer or a shooting star, it makes sense. And let's have a look at here again. There, we're near that area of resistance, and the market reverses there again. So, all these markets here. If I go again here, so then do you want to go through that one? It's euro dollar.
Yeah, and in fact, I just read a question from Cheryl, which I think is just worth addressing just very quickly first. So she said, so would it work on the 2-minute chart also? Now, if I was to put it like this, and the answer is yes, but if I was to put it like this, those Marubozus, this Marubozu here, we're looking at a daily chart. Now, that's telling us that for that whole period of the day that a new low was not achieved. It literally opened at a price and just continued in one direction and closed right at the high during that whole daily period. So there has been a lot of movement. That is a really strong signal. And again, this is a daily chart. There is something of significance here. Whereas if you were to look on a 2-minute chart, you might actually be looking at more coincidences than rather an actual significant point. Does that make sense, Gerpel, to you? Like this is significant, whereas you could get it out of.
What you've got to understand is why are certain candles red, why are certain candles green? Now, the problem with the 2-minute chart is it's too open to market noise. It's too open to market rhetoric out there, which will make that candle very quick. You know what, at the end of the day, the daily 4-hour, they're the real markets to look at when you're looking at things like sort of candlesticks. They're the ones that are telling you in that day, in that 8, 9, 10, whatever hour period, there were more buyers and sellers, but the sellers ultimately came out on top. So, for example, on this euro US dollar here, look, on this particular day, look, this was on the 1st of September last year. You know, the market attempted to take this market higher, but ultimately they couldn't force the market to settle at those highs. The sellers had control ultimately. So ultimately, at the end of the day, the market settled near its lows. So what that tells me is more of a prominent story. It tells me during that day, so think about it logically, during the day, the buyers simply didn't have enough buying power to stay or withstand that buying pressure. The sellers, ultimately, the bears came in, they took the market down, passed beyond the opening level, and they settled it beyond the low. So what that tells me is the market is very weak, potentially. And the market was rallying there, and the next day, lo and behold, everything came down. So, you know, it's given, what these candlesticks are giving you are clues, an idea of what's to come. That's what I like about it. They're not lagging. They're giving you almost a crystal ball type of scenario whereby, you know, they're telling you what's happened in the day, who came out on top. And if you work out and analyze in your head, you know, what really happened, who won? Was it the bulls or the bears? Where did we close? And then was it next to a prominent area? You could potentially then make a good sort of a selection of the next day, which way the market would potentially go. So that's what this was all about. This is telling you which way this market's going.
Gerbil, just very quickly here. So, absolutely fantastic point. And going back to the whole 2-minute charts, yes, absolutely, it is possible to look at these on a 2-minute chart, but again, it is more of a coincidence. But if I was just to make the screen blank here, and I use my little pen just to draw some annotations. So the reason why I personally really like hammers is because the markets, they go through peaks and troughs, ups and downs. Again, it could be generally trending up, but the market goes in peaks and troughs. Now, that whole concept of buying low, selling high, it works nicely with the hammers, because what you would typically find is that at these points, have a look to see whether any of these are hammers, because that could then be an indication foreshadowing that move. So you might have your little long wicks protruding from these points. They help you identify, and again, this applies to 2-minute charts also. Just look for those kind of prominent areas. Again, that is why it is typically one of my favorite patterns. Just have a look at those peaks and troughs just to see what the candle looked like at that time, so that then you can actually recognize those similar patterns going forward. Now, Gerpel, there was just another question which I wanted to address very quickly before jumping on any other charts here. Now, Charles has asked, I see a list of equities on the screen. Can I spread bet equities? Could someone give me a call? I don't know whether you perhaps want to just answer that quickly, Gerpel, or...
Yeah, sure. Of course you can, Charles. I mean, the whole point is, look, you've got equities here. As for example, on ETFs, you can trade whatever you like, really. You've got access to equities, UK, US, and European stocks and shares. I mean, I've got the BP daily chart up here. You can see here on BP, it's pretty much the same scenario. Just going back to what we're saying here, Jonathan, you know, whether it's a doji, whether it's a hanging man or whatever, the same scenario is exactly stands in place with equity. So it doesn't matter what asset class you're looking at, whether it's whether it's an index, commodity, or a currency, or even a stock equity like this. You know, they're all very, very important in the respect that they all literally, you know, the makeup of a candle can signify the next, just you know, whether the bears and the bulls are in sort of control of the price of that particular market. Now, yeah, Charles, absolutely. So you can trade here. I've got a question here, Johnny. We've got quite a few questions. Does it matter the color of the candlestick on the hammers or the dojis? Generally, I don't think it does really, because ultimately there'll be some points like here, for example. I just lost
with the
it there.
dojis,
So for
it
example,
certainly wouldn't. The dojis,
yeah.
the whole point
Well,
is that they're
yeah,
virtually the same. So,
oops, sorry, I keep on losing that. If you have a look at this one here, bear with me. I'll get my annotation out. So if you look at this one here, so this is just on the BP chart, you can see that actually that could have been either green or blue, green or red, Jerry. So really, the significance is still the same. I mean, bearing in what it will probably say is with a shooting star, if the shooting star closes below the open, probably be more prominent of a sell. Probably it will be more powerful. So you could still have a hammer that's red or green, but if a hammer is green and it closes above the open, you're probably looking at more a stronger hammer. Does that make sense? Or a lesser stronger hammer if it was red. And likewise here, look. So this particular shooting star was basically, they failed. The buyers failed to take the market up and failed to close the market there. Ultimately, they closed this particular market all the way at the bottom here, so slightly lower than where it opened, and because lo and behold, the preceding days, the BP share price then significantly declined after that. So yeah, I mean, I guess if the color is in line with whatever candle you're looking at, I guess it just gives you more sort of power to that. Wall chart with candlesticks patterns would be useful. Yeah, I think you can actually get a load of those. Well, something that we could probably put together, John. So if anyone would like that, let us know. If you'd like a sort of maybe a handout with different sort of these candlesticks, let us know. Just put in yes in your sort of little chat box. Me and Jonathan could probably come back to you and probably give you some sort of handout to make. It's a little bit of like a cheat sheet, really. You can get a little cheat sheet where.
Oh yeah, and there's certainly other patterns to look out for as well. So
there's loads. I mean, we'll be here all afternoon. I mean, I want to go through things like engulfing patterns, bearish engulfing, bullish engulfing candlesticks. So we will, of course, go through it. We couldn't do justice if we start to go through everything, Jonathan. And you know, I want to at least whatever small patterns we've covered today, I want people to understand the significance of these. So it's not worth just skating over all these very quickly, because you're just not going to do them any justice in that respect. So. But I know
there was. Sorry.
No, carry on.
There was just a question which we missed earlier, which I just wanted to address here. Well, I don't think it was a question; it was more of a joking statement. But Sarah's saying that we're missing quite a few. We're not annotating all of the patterns which appear, and these patterns we've just marked a few of them, but they are kind of prevalent. If you know what you're looking out for, then you will see them appear. And that's why I would encourage just to have a look at your own charts. So I was telling about the peaks and troughs earlier. You've basically got the peaks and troughs there. That's, of course, just on a stock chart. So the pricing shows a bit differently there. But if I was just to go back here, there are, in fact, lots of different candlestick patterns. I've just, for example, if I was just to mark here, doji, right there, that whole kind of indecision point in the market, which if you look, all I had to do was zoom out to see what significant level that is. So yeah, it's interesting stuff. They will appear all over the place. So
Yeah.
it's not that we've just marked out a couple of them there.
Yeah. And remember, Jonathan, just the one thing, I know we're coming up to an hour here. When it comes to looking at Japanese candlesticks or these types of dojis and hammers and whatever we've looked at today, a lot of this, especially with dojis and some of these other ones, you're going to look at the end of your time frame. So if you're looking at a daily or a 4-hour or an hourly candle, you're looking at the end of that area. So, you know, your eye should sort of automatically look at how that candlestick has closed off. So, you know, it doesn't matter what market you're looking at. You know, like tonight's candle here on the Dow Jones, we're close to all-time highs. We could sort of finish off all-time highs again. Let's face it, you know, we've had this big dip. We could carry on going up. This could be a Marabuzu. This could sort of carry on going up and up and up. But then today's could be significant, today's candlestick. Keep an eye on it. So, I mean, how many people look at the closing candlestick of a chart? Probably not many, but after today, I'm hoping that whatever the 106 or 7 people are here today, you pay a bit more attention to the closing candlestick on all the charts that you look at. So whether it's a currency or whatever, have a look at it. What's the significance of that candlestick, the closing daily candle of that? Is it giving you an idea or a clue of what might bring tomorrow? Yeah, what's coming tomorrow? So why don't you, a little sort of tip for you guys, you know, pick 9 or 10 different markets, have a look at the closing candlesticks of those markets, see if there's any significant candlesticks there, and then on a piece of paper, why don't you then say, you know what, I would buy or I would sell the next day, and have a look, see how that would end up. You know, that's what I used to do when I first joined this industry many moons ago. You know, when you're looking at Japanese candlesticks, you know, the more you can start identifying these things and get better at it, the more you'll start using them. It's as simple as that. So you'll get more use of it. So look at the you know, whatever broker you're looking at, guys. So, you know, there'll be certain brokers that will use different close times. So whatever broker you're with, look at the close time on that broker, look at the close time on that candlestick. It's not set in stone, 10 o'clock, 9 o'clock, midnight. It doesn't matter. Just have a look at what time your broker closes that candlestick. Have a look
Jenny,
at the shape of that
you, that
candlestick.
would be 9 p.m.
Yeah, so have a look at that candlestick and then maybe have a look at what the next day might bring. Do you think the market will continue going down? Was it a doji? Was it a hanging man or whatever? So, yeah, the more you start sort of looking at the practical nature of these candlesticks, the more you'll start incorporating them into your own sort of trading.
Now, we are fast approaching the end here of the webinar. However, there is a poll which I would just like to launch here very quickly. And it's quite important. We want to make sure that Gerp and I we're doing our job well. So after today's session, do you feel as if the patterns that have been shown are easy to identify? Do you feel as if perhaps you could walk away from today's session, do a bit of homework and have a look at these patterns yourself on like previous chart information? I'm very pleased to say everyone so far has said yes, so that's great. Of course, having a handout next to you will always be more useful. So certainly that would be something that we'll look to produce if enough people are saying that would be useful. But yeah, it's looking as if people have found those patterns that we've demonstrated today to be easy to identify. So that's good, Gerpel.
Yeah,
always a good start to a Monday.
Yeah, I mean, yeah. So you know, again, you know, I'll reiterate the point. These sessions are not. They're not here for us to say you need to throw all these sort of different types of indicators, types of candlesticks. You know what? Candlestick trading for some people, that's all they ever use. They don't even look at any other indicator. All they look at is just bare bones candlestick trading, and they do a very significant and a very successful job of doing it. So someone out there, this might be your bag. It might be something that you've picked up on, and actually it's really given your trading a bit more of an edge, which other maybe indicators or other things that haven't. So yeah, we're here to introduce these concepts of trading to you, and hopefully for some of you, not all of you, will give you a bit more of an edge when it comes to maybe starting incorporating these different facets to trading. You know, I mean, there's so much to trading, Jonathan. You know, we've not even covered things like flags. Someone mentioned to me flags and pennants, bull flags, bear flags. You know, there's lots of different things we can cover here. But yeah, hopefully, you know, you guys have enjoyed today's session and you'll take away some significant information. And yeah, hopefully you'll use it to your good own trading ahead.
Perfect. And I've just included that quote again from the very beginning about technical analysis, as I think it feeds in quite nicely to that point that you just ended on there, Gurpal, that of course this is all to do with human behavior, and human behavior is repetitive, it's predictable, and so therefore these price patterns they have value. So yeah, it's always just worth having a look at those on your own charts. Let us know how you get on. We've got our contact information on the screen here now, so do feel free just to get in touch. If you would like us to cover any particular patterns in the future, just let us know. Again, just drop us an email, give us a call. We'll be more than happy to help. Of course, everyone have a safe week ahead, and hopefully we'll see you on the next one. Thank you, everyone.
Thank you very much. Goodbye.